everyone. Thank you for tuning in. Let's start today's topics. As the tech industry continues to experience huge waves of job layoffs, Amazon has recently increased its cutting efforts, announcing an additional 9,000 jobs being cut from various divisions, including its highly profitable cloud computing and advertising businesses. The company had previously announced 18,000 job cuts, and with the new announcement, the tech industry has reached approximately 300,000 jobs cuts since 2022. Companies like Facebook, Amazon, Microsoft, and Apple have all pulled back their investments in certain areas, this along with their frozen hiring, leading to further job losses, and their stock-heavy compensation plans, has resulted in many employees having their pay cut. No wonder tech workers are queuing up for jobs at the local grocery store. Traditional automakers are feeling the weight to catch up with Tesla EV targets, as the company seeks to reduce production costs by half in the coming years. UBS analyst Patrick Hummel asked Volkswagen's financial officer Arno Antlitz about this at a recent meeting, to which he responded they are aware of the upcoming competition. GM's Investor Day also confirmed the race to the bottom when it comes to EV production. As Morgan Stanley analyst Adam Jonas pointed out in a note to investors, traditional automakers seem to be all talk and no action as they're trying, and struggling, to keep up with all that Tesla has to offer when it comes to EV production. Despite mixed outlook for the semiconductor market, Intel and AMD, who appear to be seeing signs of recovery in their PC markets, stand out from the pack. Intel is encouraged by signs of growth in its commercial market business, while AMD is also seeing strength in its FPGA products. Guess at least something good can come out of a pandemic. Nvidia has focused on AI, and Chief Executive Jensen Huang's keynote address will discuss his vision for the future of AI. The company has attracted leading players from the tech sector such as Adobe, Amazon, IBM, and Netflix, and Wall Street has voiced its support for Nvidia's progress in the AI market. Nvidia's AI advancements are so revolutionary that investors are practically salivating over the prospects. Microsoft MSFT is reportedly planning to introduce an app store for games on Apple and Android devices in 2024, if the regulators approve its $75 billion deal for Activision Blizzard. This move is in line with the European Union's Digital Market Act, which may come into force by March 2024 and will require Apple and Google to open their platforms to outside app stores and companies. Despite this news, Microsoft's shares were slightly down in Monday trading. Microsoft's pockets must be feeling deep enough to drop $75 billion on a new venture while the rest of us watch our bank accounts get smaller by the hour. Syneos Health has announced a multi-year partnership with Microsoft to provide biopharmaceutical customers with an analytics platform powered by Microsoft Azure services, including AI and machine learning through OpenAI, that should accelerate clinical development. The platform is meant to analyze and process data to optimize processes such as resource allocation and site selection in order to slash clinical development timelines. Syneos Health stock has reacted positively to the news, up 1.7%. This morning, good thing Microsoft is there to make decisions for us. With their stellar track record, what could go wrong? A group of 43 Facebook content moderators from Kenya are suing Meta, Facebook's parent company, and 2 outsourcing companies for alleged unlawful redundancy and union-busting activities. The moderators claim that the companies were complicit in blacklisting the workers for organizing a union and enacting mass redundancies with unjustifiable reasons. This case has major implications for the way Meta operates with its content moderators, as the company works with thousands of these individuals. Foxglove, a technology rights group, is supporting the lawsuit. It looks like Facebook and its associated companies certainly have some redundancy to work out of their own. As sales of electric vehicles, EVs, steadily climb around the world, so too do the rates of insurance premiums when an accident occurs, due to the difficulty in assessing and repairing even slightly damaged battery packs. Companies like Ford and General Motors have made their battery packs easier to repair. However, Tesla's decision to make their batteries a structural part of the car has caused a difficulty in which the costs of repairs moves back to customers and insurers. Furthermore, this issue is compounded due to the fact that a majority of manufacturers are not willing to share access to their battery data, thus making it impossible for insurance companies to assess just how badly damaged the battery is and if it is worth repairing. Specialists predict that unless carmakers can provide access to battery data, insurance premiums will only continue to rise as EVs become more and more popular. We sure do love paying for the privilege of ownership and protection when it comes to EVs. This is everything for now on the Wall Street wackiness. See you in another time.